Good morning. Welcome to Scanfil's Q3 2025 results webcast. Together here with me, my name is Pasi Hiedanpää. I'm the Director of Investor Relations and Communications. Together here with me is our CEO, Christophe, and our CFO, Mr. Valo. You can ask questions through the chat box window during the presentation, and all the questions will be addressed at the end of the presentation. Now, handing over to Christophe. Christophe, please.
Thank you, Pasi, and welcome to all of you for this Q3 report. Really pleased to be with you today. Let me start first by giving you an update. As you might have seen, we had a fire in an operation in Italy that we are planning to close in Q4, so I felt I just give you an update on that before we go to the formal quarterly report. And the fire broke in the 17th of October in one of the wings of the building where we have the outgoing good warehouse located. The good news there is now all employees are back to work and the team locally is ensuring business continuity and working with customers to restore situation as normal. This is a company that we announced we will acquire during July, and we are still planning to close that acquisition during Q4. So that's the update on the situation there, and I felt it was good that you can get that information from us. Moving now to the Q3 report 2025 and the key events. This is a quarter that was extremely rich in activities and happenings. We acquired significant amounts of new contracts during the quarter in the range of 70 million. One of the ones that we promoted during the quarter is the deal we closed with Stabli, which is a significant player in their industry and have decided to go with Scanfil as a manufacturing partner. So very pleased about that and thanking them for that. We also continued to prepare our growth journey with SRX Global, where we inaugurated the modernized factory in Johor Bahru in Malaysia. We have now a fully operational factory, one of the most modern you can have, and we are already starting to ramp up some of our customers in that operation, as in the same times we are also getting a lot of interest. I mean, I was myself down in Malaysia 2 times during the previous quarter, and a lot of people flying from around the world to see that operation. Extremely pleasing, and moving accordingly to our plan. We also continue to build a competence in our company, and I was very pleased to have Anna-Maria Tuomonen-Reini joining us. Anna-Maria has a long-standing experience in supply chain. We know that supply chain and procurement is important in our industry, so very pleased to complete our management team with her competence. So a good add-on to our team. Then we announced during Q3 the intention to acquire MB Elettronica in Italy. This acquisition is key to Scanfil future and to our strategic development. It will give us a very strong footprint in aerospace and defense with some very major customers in that field in Europe. So a very good complement to Scanfil today. So very pleased with those developments. And then last but not least, during August, we announced that we have received a gold rating from EcoVadis. And I think it shows and it in a way gives us the comfort with all the effort we have been doing on building a modern company. I mean, sometimes maybe manufacturing doesn't get the place it should deserve, but getting from EcoVadis this gold rating shows that we can be a sustainable company. We are respecting our employees, we are respecting the environment, and that's in a way a proof of that. So very pleased with that development. Moving now to some numbers related to that, and I think that in a way the number reflected the high level of activity and enthusiasm we could see in the quarter. We landed at 191.3 million euros of revenue, which was an increase of above 10% versus last year. And it was a mix of acquired growth, but also a return to organic growth with almost 8% in the quarter, which is, I would say, a strong performance from all our teams, and very pleasing to see that the contract we had been piling over the last 12 months start to create revenue. The impact on our EBITDA was positive. We landed at 14.1 million, which was an increase versus last year of 10%, and a very solid margin at 7.4%, which allowed us to deliver an increase in our EPS. So I will say the financials were positive. A few other KPI or number that I think are very pleasing to me. First of all, and it's maybe the most important, we are measuring on a regular basis our NPS score, and it was actually all-time high, the outcome we got during September, landing at 54. And I think 54 NPS is I think, a good performance for a service company, but that's where we want to be. And I think we have put significant effort to be a better partner over the last years, and it was very pleasing to see that. We also saw a development in our employee satisfaction survey that went up 2 points, which also is going and pointing in the right direction. So from that perspective, not only the numbers or the financial numbers were good, but also the way we can measure satisfaction of our employee and satisfaction about our customers showed in a good way. In the same times, we acquired for 72 million of new contracts during the quarter, which is something that will be delivered over time. And you will see later a little bit more in detail, but a very strong medtech and life science related to that. So that was very positive. In the same time, we continue the transformation of our APAC region, having strong momentum, and the transformation of our American region, where we have now become a very significant and solid electronic supplier through the transformation of our Atlanta site. So in many ways, the quarter was proving the strategy implementation. As I mentioned before, I mean, revenue increased to 191 from 173 million last year in the same quarter, and EBITDA was also obviously significantly impacted, going up to 14.1 million against 12.8 during the same quarter last year. So a positive development on those two indicators. Looking now a little bit to our regions. Americas, we landed the quarter with 12.7 million. Very, very pleasing to see that we were coming with a new quarters of growth. I mean, now 7 quarters of growth. And as I said, we started 2 years ago a journey to transform that factory to be a real player in the electronic manufacturing. And we can see now that this has taken off and is in a way landing in a good way. Revenue is increasing, number of projects in that operation is increasing, the pipeline is strong, the profit is in line with our expectation. And we therefore decided to invest in a new line in that operation. So we will add another manufacturing line that will be up and running towards the end of this year, beginning of next year, to continue to support the growth. In the same times, we are working to close the acquisition of Atco Circuit that should be closed during Q4. And Atco Circuit, which is located on the north part of America, in Detroit, will actually bring a lot of complementarity, a lot of redundancy, will allow us to secure our customers in the region, and therefore will be a perfect complement to our American strategy. So a very pleasing development in Americas. Continuing with APAC, where we also had positive development, growing to almost 54 million against 42 last year at the same time. We continue to enjoy strong development in our operation in China, where our Suzhou operation remains a best-in-class operation and state-of-the-art operation, and gains traction from customer on a continuous basis. We were also extremely pleased with the performance in the quarter from our operation in Australia, that were actually in the top of Scanfil deliveries. I mean, in terms of growth, in terms of profitability. So very pleasing to see that this operation we acquired a year ago is proving solid result. And then last but not least, I mean, we have been working, and the teams there have been working very strongly to transform our Euroborough operation in what we call between ourselves maybe a mini Suzhou, meaning a very modern factory with top-notch equipment. And I was pleased to be there with customers, as I said, during Q3 to demonstrate our new capabilities there. And I'm convinced it will make a difference for Scanfil. Central European region. For Central Europe, the quarter was a little bit of what I will call a transition quarter. I mean, they had a slight decline in revenue, a 3% decline, and also a decline in profit, 6.5% against 7.1%. It's always, you could say it's always disappointing when you don't go up, but sometimes that's the price to pay. I mean, they will have a very strong first quarter, and we had to prepare for it and get the resource in place and the people in place for that. So that happened accordingly to the plan, and then we started to gain momentum during the end of Q3, but that will translate in the future. We also had a lot of activity on the M&A front, as I mentioned before, since we signed an agreement to acquire MB Electronica during that quarter, and the business will be actually included in that region when it's joining Scanfil. Moving now to Northern Europe. We had very positive development in Northern Europe, moving to 63.1 million from 56 last year, and a good contribution on profit with 8.6% EBITDA, which is a very strong performance. I mean, here we got mainly two drivers. The first one is an extremely strong performance and development from our defense customers that grew extremely significantly. And then it was complemented by a good development from a couple of energy and clean tech customers that are delivered out of that region as well, which landed in a good development in sales with an organic growth in the range of 12%, which is good for Northern Europe, I will say, and also a good level of profitability. So positive development from that side, and I think that mixed with a good cost control, it allowed us to deliver in a good way on that region. Looking now a little bit at the customer picture, we remain with a balance that is quite close to the previous quarter, even if you can see that our top 10 customer is right now very active. And I think that it's probably the outcome of the effort we have been putting over the past years to create a strong relationship. And we have won significant amount of deals with those customers. So what we can see is that they are moving more and more towards us. It translates in our number, and it shows also that our focus to deliver to those customers is creating growth in a good way. Now looking at the different customer group we have, first of all, industrial was still slightly negative in the quarter, and you know, industrial for us is a mix of many things, and some were very positive. Actually, defense customer, as I mentioned before, were growing extremely high double-digit numbers, when some more traditional industry were more flattish or slightly negative. The positive side was we won an amount of deal in the quarter in that segment that was very important with 39 million. And it was mainly driven by one customer in the logistics sector that has decided to get closer to Scanfil and push a very bigger part of his manufacturing to Scanfil. So we thank him for that, very appreciated, but it also shows the commitment we have had over the years to win that position with the customer. So very pleasing development. Looking now to energy and clean tech, I was very pleased to see the outcome of the quarter. I mean, I have said for many quarters now that I believe in energy and clean tech long term, even if it went through tough time after the hype of 2023. And it bounced back in a very good way in the quarter, up 28% versus where we were last year, going up to 70 million. It's very pleasing to see that now all customers in that customer group are coming back to good level of business. In the same time, They are appreciating our help, so we are discussing new project with them, and it translated in wins of 18 million euros of win. So good to see that the long-term dynamic of that customer group is positive, and that it now start again to translate in numbers. And then last but not least, we had a very strong development in our medtech and life science business with a growth of 16%. That was also coupled to very significant wins with 15 million, which if you look at historically is an outstanding numbers. We have not had that. And I think that the reason for that is a mix of the current turnover. We have grown and developed our current customer in a good way, and we have a good partnership there, and it translates in the numbers. But the one deals also shows that now we are onboarding new customers, that the effort we have made to build competence in that field, to get certification to deliver to that customer group in many of our factories is now something that is getting recognized with our customers. So we got a few strong brands and names joining us during the quarter, and that I am extremely pleased with, because when we decided to create focus on that customer group, it was hoping to reach such a result. So very pleased with that development. I will with that hand over to you, Kai.
Thank you, and good morning from my side also. I will start with the EBITDA bridge from year-on-year Q3 numbers. And on the left side bar, you can see the EBITDA last year Q3, which was very strong, 12.8 million, 7.4%. And on the right side, you can see the EBITDA of this year Q3, 14.1 million, and even improvement from the last year. And how did that happen? The main driver is the organic growth. We made almost 8% in a quarter, year on year, and besides that, we have a 5% growth coming inorganically, meaning SRX acquisition of last year. So in total, it was driving the growth of 13% year on year. Although we have then impact translation of the P&L was causing negative impact due to the weakening Chinese yuan and USD, and that was 4.3 million negative impact in the revenue. Even after that, the growth were on the level of 10.4% in total. 10.4% growth was well in line with our expenses growth, 10.3%, a bit less, and with a good efficiency, and keeping in mind that there is activities ongoing for preparation of the new product ramp up and for Q4 volumes. Depreciation was eating a bit the percentage wise, and then it means the investments for the future. For instance, the investment in the Malaysia electronic line. So end result 7.4%, very nice for the quarter. That was also supporting us to catch up for the year to date, and we are now here. I'm showing the year to date numbers in the same way. Left side is the last year 7.1%, year to date 40.2 million of EBITDA, and on the right side then this year now we are year to date 40.9 and 7%. And year to date as well we are organically on the growth mode, and overall growth over 5% in the revenue again, and even larger impact in the due to the translation differences of FX for the same reason than Q3, after which the growth is 3.2%. Anyway, it's well in line with the expenses growth and the efficiency. We have been able to keep on the good level. again, the depreciation slightly impacting to the relative result. Anyway, good result, 7% year to date. Jump into the balance sheet, not big news here. Inventories have declined 7 million year on year. The pace is a bit lower, but in Q3 also we were growing a bit with the inventories for the reason that the volumes were growing, and that's quite natural effect. Cash we have in hands nearly 5 million more than a year ago. Good to remember that includes the effect of SRX acquisition, so that happened in between. So we have now a bit more cash than we did before the acquisition. That cash compared to the debt, interest-bearing debt 66.4 and 66.4, including the leasing liabilities, about 28 million, almost 30 million. So the debt is less than 40 million from the financer, and then basically we don't have a net debt if excluding the leasing liabilities. Equity is clearly more than half of the total 550 million of assets. Cash generation, for the same reason that we needed to buy take some inventories in for the growth and higher volumes, then the cash generation was a bit more modest than in the past few quarters, although still clearly positive, 7.4 million, and year to date we are now 40 million of positive cash flow. And looking these last 2-3 years, almost 3 years now, we have generated over 200 million of positive cash flow. Half of that we have spent for the dividends and for the machine investment. So then there has been another 100 million remaining after those expenditure. Net debt is can say that this remains low level, like said, 10 million, practically no net debt excluding the leasing liabilities, and we are slightly below the last year Q3 level, and keeping in mind that in between we had this SRX acquisition, so basically that has been neutralized in our net debt by now. And in relation to the EBITDA, it's 0.14, year ago 0.15. And our liquidity status is good. We have 250 million of liquidity, which then of course consists of this 50 million of cash, and then we have about 100 million of unutilized loan commitments and agreements, and then about 100 million of overdraft or working capital facilities. And the last page, we have the key figures here, 55% of equity ratio. It's rather flat, some variation in quarter to quarter, but more or less in the same level. Return on equity, nearly 13%. Gearing is reflecting the debt level, and earnings per share in the quarter is 1 cent higher than last year. That was all from my side, and hand over back to Christophe.
Okay. So we reiterate our guidance, no modification on that side. As I mentioned, we have a couple of focus areas. One of them is obviously the closing on the M&A we have announced in the previous quarters, and we aim for that during the coming quarter, during Q4. And then the second one is obviously we want to continue and keep the momentum on our organic growth, both in delivering on it, but also in acquiring new contracts with customers. And finally, we try to do that with keeping cost control and keeping control of our inventory. So that was for our Q3. Pasi, I can leave it over to you.
Now, heading to Q&A. Well, we ended the presentation to guidance, so let's continue with the guidance. Jakob had a question. What are the factors withholding you from narrowing your guidance?
Well, I think that for us, I think that the policy we have had is as long that we are in our guidance, we will just remain in it and not change it. I mean, for me, I think I prefer to focus on delivering than playing with guiding number left and right. So from that perspective, we will keep the guidance as long that we are in that corridor. If we get out of the corridor, we will just change it.
Jakob continues. Is there anything else you can do on the cost side, or will it be higher volumes required to expand margins from here?
I mean, there is a double answer. There is always something you can do on the cost side, and as you know, we work with our Dream Factory program, which aims at creating efficiency. I mean, we have implementation of AI in our factories and in our admin functions to improve efficiency. We work with automation, so there is always things we can do, and we do it on a regular basis. Then it's also obvious that I think we are still at a level of occupancy of our operation that leaves quite significant amount of room. So obviously, when the programs are ramping up, you can see a positive development on EBITDA. I mean, it was the case in this quarter, but there is still room there to benefit from that.
Thank you. A question regarding the growth in Americas. Scanfil's turnover in Americas is growing faster than the other regions. ADCO acquisition further increases turnover in this area, but still the market area is quite small compared to the others. Are you looking clearly higher growth in the Americas to balance turnover globally, or to mitigate any problems caused by trade wars or changes in custom policies?
Yeah, but I think it's yes on everything. First of all, I mean, we have global customers. They need support in the Americas region as they need support in the rest of the world. So that's why we decided to invest in that region. That investment has been clearly successful. It's 7 quarters of growth for that region, which is very pleasing. We have decided to invest in more capabilities just to support the orders we have got, the pipeline we have, and follow. Then that's for the organic exercise. Then as you saw, it remains a small region that has a lot of potential. So in order to support that growth, we have also looked at M&A, and we were very pleased to find ADCO that brings both a nice customer portfolio, but also very good competence in manufacturing, but also in fast prototyping. I mean, they have fast prototyping capabilities, which will help us to win customer, to ramp up project. So very complementary. But definitely, I mean, we see an opportunity business-wise. There is actually a trend to co-locate, to relocate, and to become more regional in the world. So America is definitely strongly impacted by that. Our customer trust us. So for us, no reason to not expand there. On the opposite.
Okay, thank you. Now, when we are talking about the regions, so let's continue with the Europe. Antti asks about the European macro environment, and it has shown some signs of recovery. Have you seen changes in demand environment or customer forecasts in Europe during the Q3 or in October?
Well, I mean, in a way, we were expecting it to go that way, but the first thing you can see, and you saw in our report, is a strong growth in energy and clean tech. And the strong growth is in big part coming from Europe, and that is either already come in during Q3 or is going to continue during Q4. So in that perspective, yes, we see a rebound on that sector. Then the second element that is driving Europe for us is also defense, that is growing very fast, and it's I would say only our European factory that are operating in that field. So I will say the overall business is bouncing back in Europe for our traditional markets like energy, clean tech, and medtech, where we are strong. And then defense is giving let's say it's cream on the cake from that perspective.
Okay, continuing actually with the defense, what you mentioned in here. Sindre asked, do you work with the new customer prospects in defense in Northern Europe?
I think that there is two things on defense. We have a already nice customer portfolio. And what I mean by that is in our portfolio, we have customers that can be sizable players that don't necessarily have a sizable partnership with Scanfil. Obviously, we are talking to those ones to improve the situation. Then in parallel, we have strong manufacturing in quite a few countries in Northern and Central Europe. And it's very natural that we talk with local authorities to see how we can support them in that way. So the answer is obviously yes there.
Thank you. Given the easing in comparison in Q4 2025, do you think that the current ramp-ups will still enable you to show this high organic growth?
Well, I think that what I am very positive with is if you look at the amount of contract we have won over the past year, if you look at the satisfaction of our customers, I believe that we are building up a situation that will allow us to sustain our long-term target in terms of organic growth. Then it will be quarter that will be better than others. But I think we should be able from now on to deliver organic growth on a constant and continuous basis. And we are prepared for that. I think that I was mentioning, I believe that Q4 will be good in Central Europe. I think we have prepared for good momentum. I think that we will continue to see organic growth from now on.
Okay, thank you. Continuing actually, Jakob continues with the order intake numbers. Would it be fair to expect a return to order intake numbers more like Q1, Q2 2025? Or do you see underlying improvement in sentiment leading order intake somewhere between Q2 and Q3 ahead?
I think it's an incremental step. I think that we have started to see that coming previous quarter. I believe it will continue. And it's a mix of the sentiment and that I said. We have seen people returning. I mean, people that had our time last year now are back to a good level of revenue. And then it's also mixed with us winning project. I think that our pipeline of project has never been as strong as it is now. So it will continue to build up. Then we are in an industry where things take time. But on the other hand, it's also for the good of it. I mean, it's in a way predictable business.
Okay, thank you. Antti asked about the MB Cortona. What is the status at MB Cortona as we speak?
Yeah, as I said, all employees are back and are working, and manufacturing is ongoing and delivering to customers. I mean, what you noticed in my comment is that it was a wing of a building that was impacted, and it was a wing where we have a shipment going out from. So I would say the main building and main manufacturing building was not impacted at all. So they are working. It's obviously not a fun or pleasant event to have, but for the one that have seen some videos, it looked more dramatic on the videos than it is in reality.
Okay, thank you. Antti continues about the possible impacts on M&A. Does the fire have any impact on the ongoing M&A anyhow?
Now we are working on closing that acquisition, so we continue to work. It had an impact in the sense that we needed to understand where it was, but for the rest, I mean, the activities are going on to close during Q4, which was our goal. So there, it's nothing strange happening there.
Okay, thank you. Antti continues about M&A and consolidation. Consolidation of European EMS markets is speeding up recently. Do you expect this to change competitive environment visibly from Scanfil's point of view in the next few years?
Yeah, no, but it's good that you have noticed that. I think for me it means that in the next few years we will see a couple of sizable EMS company building up. I believe that the strategy we have with a mix of organic growth and acquisitive growth is the right way to go to build that. I believe that we have strong customer portfolio, dedicated team, that we have a strong financial position that help us to carry that journey. So your answer is probably yes, the landscape will evolve. You will see a few players emerge, and I think that Scanfil is very well positioned to be one of them at least.
Okay, thank you. Still, if you want to ask questions, so type in the chat box window and we'll see if we can have more questions coming in. Hold for a while. Sometimes it takes a bit time. Okay, if no further questions, so handing back to Christophe, please.
Thank you, Pasi. So as a summary of this quarter and takeaways, I mean, you have seen revenue gaining speed with an organic growth of 7.8% and total revenue growing 10%, which is nice to get back to a position where we can capitalize on the effort we have made with our customers. It impacted our profit level that was also quite strong in the quarter. You could also see that in reality, our operational performance is looking even better than it is since we were impacted by currency during that quarter and during the first part of the year. But I will say we have good control of those situations. In the same time, I mean, we are continuing to work on our growth plan, both organic and acquisitive. I believe that the acquisition we have announced will really contribute to build a position in aerospace and defense, which is a nice way to do it. We have also done major steps in building organic growth. I mean, we inaugurated our new site in Malaysia, or at least the modernization of the site in Malaysia. And we have announced investment in the US to support the growth. And all of that is driven by the high level of contract wins that we have had in the quarter. 72 million was strong. And as I mentioned, very pleasing to see that the effort we made to focus on medtech and life science paid off with a very high level of wins and new logos coming in, which was very pleasing. And all of it with a strong balance sheet that should allow us to continue to prepare the future and to make Scanfil a strong player in the EMS field. So positive development during that quarter. Want to thank you for listening to us today and wish you a good day.